الرحمن علم القرآن خلق الإنسان علمه البيان الشمس والقمر بحسبان والنجم والشجر يسجدان والسماء رفعها ووضع الميزان ألا تطغوا في الميزان وأقيموا الوزن بالقسط ولا تخسروا الميزان والأرض وضعها للأنام فيها فاكهة والنخل ذات الأكمام والحب ذو العصف والريحان فبأي آلاء ربكما تكذبان صدق الله العظيم.
Jazakallah. We are highly obliged that Mr. Sakib Sherani, founder and chief executive of Macroeconomic Insights, has joined us today as guest speaker. Mr. Sherani has a wide-ranging experience in public policy, the financial sector, international capital markets, at the corporate board level, and in the development sector, as well as with non-profit organizations and initiatives. Till recently, he was a member of the Prime Minister's Economic Advisory Council. He has also served previously on the Economic Advisory Council on 3 other occasions. He has also served as the Principal Economic Advisor to the Ministry of Finance, Government of Pakistan between 2009 and 2010, and was a member of the panel of economists of the Planning Commission, Government of Pakistan during this period. He has also been the member Revenue Advisory Council of Federal Board of Revenue. Mr. Sherani will speak on the main theme of our series of webinars on impact of COVID-19 on global and Pakistan's economy. Without further ado, I would like to invite Mr. Sakib Sherani. He is with us. Thank you, sir, for joining us. Please, the virtual floor is yours. Thank you.
Assalamu alaikum, Dr. Saiba and everybody else जो इस webinar पे मौजूद हैं. Thank you so much, first and foremost, to Fatma Jinnah Women's University for inviting me. It's a pleasure to be talking about this topic. I think बहुत मौजू है. Obviously, हमें पाकिस्तान के बारे में काफ़ी different किस्म की मिल रही हैं input. Whether it's from PIDE or it's from SDPI. I think it's important to step back and take a perspective of not just what's happening to Pakistan, but what's happening around the world to the global economy, because obviously that will have a major impact on Pakistan. So what I've done is I've organized this presentation along 3 axes. Obviously, they're all interconnected and interrelated. पहले हम जायजा लेंगे कि ग्लोबल शॉक है क्या, हुआ क्या. Immediate aftermath में मैंने इसको bifurcate किया between the immediate aftermath and then the more current situation and the outlook. And then कि पाकिस्तान के ऊपर इसका क्या impact or likely impact है. So let's very quickly begin with what happened in February and March. Clearly, as you know, कि एक immediate sudden stop हुआ global economy में. Factories, businesses, offices, global transportation links, logistic networks, supply chains, everything stopped almost immediately over a span of just a week or 10 days around the world. And this created, or in the backdrop of this, obviously, COVID-19 ki situation thi, so there was massive uncertainty, and we can see this in a number of slides. First, if we begin with China, because this was ground zero, the epicenter of the pandemic, and what we see is that China's industrial output screeched to a halt in March. But obviously, as I'll talk about it a bit later, it has picked up quite sharply from there as well. But it fell from about 7% year-on-year growth to slightly over -1% contraction. More dramatically, in a matter of about 6 weeks, we see that in the US, about 34 million people from the workforce, from the active workforce, filed for unemployment benefits. That means they were laid off, either temporarily or permanently. But 34 million people in a matter of 6 weeks, which is a larger shock to the employment situation in the US than even in the Great Depression. And if we look at what happened to global trade, now this slide may not be very clear if you're looking at it, but basically this is a mapping of global trade flows. And the dots represent trade nodes, the global trade nodes. So China and the USA, of course, many other countries, Japan, etc., are marked out. And the larger the dot, the bigger that country or trade node plays a role in the global trade flows. And clearly what you can see from this slide is that there's 17 countries that play a huge part in global trade flows, that they had the highest number of COVID-19 cases, and they're critical trade nodes in the global network. So that obviously had a huge knock-on impact on the global economy and global trade. And I think we can capture that in the next few slides as well. So this is, the top panel is Brent crude, US dollars per barrel in the international market, spot prices, and the lower panel is the S&P 500. And what we find is that in both these markets, you had one of the biggest drops ever recorded, or the greatest volatility that's ever been recorded in these markets. So Brent crude, in a matter of about 2 months, dropped about 68%, and from about $60 to a low of $19 on April 21st. And S&P 500 dropped about 34% in less than 30 days. And that pretty much represented the state of affairs for most financial markets, whether the commodity markets or the capital markets. And here on the top panel, we've plotted the World Uncertainty Index. And clearly that is really, or at least in March and April, it was really elevated. It's pretty much still there. And the bottom panel shows the 10-year US Treasury yield. And this basically is a signal of whether the markets are what is called in financial markets terms, risk on environment or risk off environment. And risk on environment basically shows that the markets are willing to take risks in assets, in riskier asset classes like equities and currencies, etc., real estate. And if it's a risk off environment, then they pretty much withdraw into US Treasuries or the Swiss franc, which are known as safe haven assets. So here, as you can see in the bottom panel, the 10-year US Treasury yield contracted very substantially, meaning that there was excess demand for the US Treasury yield, and its price went up and its yield went down. So a clear sign that the markets were in a safe haven mode. or flight to safety mode. And once again, quickly talking about global uncertainty, what we find is that in this particular episode of this pandemic created by the coronavirus or COVID-19, the uncertainty is much, much higher than in previous episodes of epidemics or pandemics. So this is really pretty much off the charts. Now, so since many of you are students, I think it's important for you to obviously understand once again the risk on, risk off environment in the markets. The top panel here shows a ratio which is which is it has a very strong correlation with the US Treasury yield, and that is called the copper gold price ratio. And copper and gold, and the reason these two commodities are chosen is because they represent the two extremes of the risk spectrum. Copper represents, a commodity that is in high demand when the global economy is doing well. And therefore, when the global economy is doing well, copper prices are high, and gold prices represent a safe haven demand. When there is uncertainty and the global economy is not doing well, this is an uncertainty hedge or an inflation hedge as well, gold. So gold prices tend to go up when there is uncertainty in the global economy. So they are both on the opposite spectrum or the opposite ends of the risk spectrum. And what we find here is that the copper gold price ratio fell very dramatically since the beginning of, since late 2019, representing that the environment is less bullish and more bearish in the world economy. And the bottom panel reflects that as well. And this is something that I captured in April from the Fear and Greed Index. So this reading showed then fear, and previous reading was extreme fear. So this is the environment that we were in March and April. And this is pretty much what some of the top economists were saying with regards to the situation. So McKinsey said this actually in 2008 and 9, but I think it looked very much relevant to where we were in March and April this year as well. And Nouriel Roubini and Mark Zandi said what they said in March and April this year. So pretty much Nouriel Roubini was talking about the possibility of a Great Depression or a Greater Depression, even something bigger than a Great Depression, the possibility of that rising. And Mark Zandi is a very, very well-respected financial economist. He's a chief economist at Moody's Analytics, and he called what happened in March and April as an economic tsunami. So to be honest, in full disclosure, I think I should state that in March and April, this is exactly how I viewed the global economy as well. It's turned out very differently and very surprisingly, and we'll talk about it a bit later. So this is the current situation. So what happened is, obviously, first and foremost, is that there was an unprecedented global stimulus by, not just the OECD countries, but also countries like India, Bangladesh, to some extent Pakistan, and many developing countries. And if you look at this, the mapping of this, in terms of the fiscal support. So if you look at Germany and Italy, for example, the size of the fiscal stimulus is almost 35% of GDP. This is unprecedented because normally, even at the height of the 2008 and 9 global financial crisis, what countries like the US pumped in was the equivalent of 7 to 8% of GDP. And here, of course, a large part of this is composed of government guarantees, but nonetheless, the size of the packages are huge. And I think they've played a huge role in turning around the situation, as we can see in the next few slides. So this is China's Purchasing Managers Index, which is a leading indicator not just for China, but around the world. The Purchasing Managers Index is a very well-regarded leading indicator. And what this shows is that the PMI plummeted in February, and then it's bounced back in April, May, and June, almost in a V-shaped recovery. And the bottom panel also shows how China's oil demand has picked up in the same period. And because China is the biggest importer of oil in the world, the turnaround in China's oil demand means that oil prices have moved up from about $19 in March. They've gone up about 45% from that low to where they are currently. Brent is now at about $43 currently, right? And similarly, we see a turnaround in the weekly jobs numbers, jobs created in the US. This is the payrolls data. And what we find is that almost about 7.5 million jobs have been created in the last 2 months in the US. So still they are in minus 15 million jobs that they lost in February and March and April. But the pickup has been very strong. And even more surprisingly is the pickup in US consumer spending. So we have some broad indicators here, hotel occupancy rates, retail, etc. But very surprising is the bottom panel here on this slide, which is a durable good. So home purchases have picked up also quite strongly in the US in the last 2 months, and this is quite surprising. Similarly, UK consumer spending has picked up for most of the sectors, barring home and garden and grocery, which have been throughout quite strong, but they've come off now in the last few weeks. But clothing, food and drink, airlines, these sectors are picking up in the UK as well. And here we have a leading indicator, an aggregate leading indicator for all OECD countries. As you know, OECD countries represent the advanced economies or the developed economies. There are 26 or 27 of them. And what we find here is, if you can look at the bottom right, you'll find that there is a sharp V-shaped bounce in the CLI, the composite leading indicator for OECD countries. The last number, I think, is for May or June. Similarly, this is the V-shaped recovery is also being reflected in the latest IMF forecasts that were released in June, the June update to the World Economic Outlook. And what we find is, if you look at the last two columns, the middle column is 2020, very sharp contraction across the world in global economic output. And in 2021, the last column, similarly, a very sharp bounce back. So if you look at the D2, the delta, the differential between 2020 and 2021 for the world economy, for example, the D2 is over 10%. Right, so from minus 4.9%, it's bouncing back up to an expected or projected 5.4%, and that's the situation for pretty much all the economies in the world. So the bottom line is that, contrary to what I thought and many other economists thought in March and April, economies around the world appear to be recovering quite sharply. However, the path of economic recovery will follow that of public health. I think that's once again has been highlighted by what's happened in the last 2 weeks in the US, for example, where many states, especially California, the large states, to some extent, Georgia and Louisiana, some other smaller states, but large states like California, they were making plans to open up their economy, and now they're actually shutting down once again because the COVID-19 or coronavirus situation is out of control there. In terms of the new cases. So going forward, there is uncertainty regarding two things. One, of course, the path of public health, what happens to the coronavirus situation globally, and also obviously with regards to Pakistan. But for me, the two important things or strands of uncertainty that stand out are In the US, the fiscal support is tapering out towards the end of August and then from the end of September. Two important things, two important milestones. So unless the US votes, or US Congress votes to extend the fiscal relief measures, it's very likely that the fiscal stimulus will start to taper off, or the effects of that will start to taper off in the US. What happens after that is actually quite uncertain. And secondly, something which I based my analysis on, and I was in the same league as the IMF, Noodle Rubini, Mark Zandi, many other economists, and we are still worried about economic scarring. Now, this is a term which the IMF and the World Bank have started to use. The proper economic term for this, it's not an economic term, it's actually a term from physics, which economists have borrowed, is called hysteresis. This is when you change the dynamics or compress a spring, for example, and when you release the pressure, it doesn't immediately come back to its original state. And that is called hysteresis. In economic terms, or from the economic perspective, our worry is that there may be a permanent loss of productive capacity. Many businesses, critical to small and medium businesses, critical to the overall supply chain in economies like the US, China, Pakistan, many countries around the world. These SMEs, small and medium enterprises, may not have survived. And we know, for example, when you track the bankruptcy data for the US, we know that there are many bankruptcies, corporate bankruptcies that are in the pipeline. Many large, well-known names have disappeared. So there's Neiman Marcus and J.C. Penney and J. Crew, and if you're familiar with these names, possibly Macy's as well. Many big names, many airlines that have already filed for bankruptcy. Brooks Brothers, so these are the big names in the US, and even in Europe. Zara, for example, in Europe has filed for bankruptcy. So maybe the impact of this, the economic scarring, will actually become clearer as economies open up. And this impact, I think, will become clearer in 4 to 6 months. So the global economy is not out of the woods, neither is Pakistan's economy. So this is how, at the very least, global economies will be impacted. This is versus the baseline. So before the coronavirus hit Pakistan, hit China, hit the Eurozone, hit the US, all these other countries on this slide, what their projected growth rates were and what they are now after the coronavirus, that differential is the economic loss and the loss in output. And that's been charted on this slide. So as you can see, China's loss between pre-virus and post-virus is about 5%, Pakistan about 5%. And similarly, if you look down, Eurozone is the hardest hit at over 10%. That is the differential between their pre-virus rate, expected growth rate, and the contraction post-virus. So now we talk about Pakistan. I think it's important also to highlight something. To understand that there is not one homogeneous impact on economies because of coronavirus. The impact comes from three sources, and it's important to disentangle or deconstruct these three sources to understand or to evaluate the impact as we move forward. The first source is the exogenous economic disruption. And this is what happened in March and April when supply chains were upended, global transportation and logistic links were stopped or halted, the flow of goods, people, and investment and capital was interrupted. So all the economies around the world, including Pakistan, were impacted from this channel. The second channel turned out to be much stronger, and that is the endogenous disruption that took place via the policy lockdowns and other suppression measures which governments were forced to take. So that closed factories, businesses, and markets. And this is turning out to be a stronger impact for many economies. And the third impact is an ongoing impact. And that is the impact, independent of 1 and 2, the impact of the public health impact, the impact of the coronavirus, how it moves through the economy and its paths. So this is productivity loss, absenteeism, reluctant consumers. So even today, when you go into the markets, what you'll find is that when you talk to either shops and malls or in markets or other retailers, you find that other than groceries and Karyana stores or pharmacies maybe, in all other situations, only about 30 to 40%. So the number of customers coming into these markets is only about 40 to maybe maximum 50% for some retailers compared to the pre-virus situation. Right? So this is generally across the board. This is the number that I get from all kinds of retailers other than pharmacies and supermarkets and Karyana stores. So that is the impact of people are not going out as often. In any case, restaurants are closed. Many parts of the economy is still closed, and many parts that are open are not functioning to their full capacity or potential. Now, also, of course, we need to understand that Pakistan is not delinked from the rest of the world. So Pakistan and the advanced economies, they tend to move in tandem. And this is the case. The correlation between the advanced economies and developing economies in the past 20 years or so, because of globalization, is strengthened or is improved very dramatically, or is increased very dramatically, and Pakistan is no exception. Now, very quickly, the channels of impact on Pakistan. Of course, there's some positive impacts as well. What has happened in the global economies? Initially, there was lower oil prices. And even now, even though the global international oil prices have come up very sharply from the lows in March and April, nonetheless, they're still about 30% lower than where they were in January and February of this year. Right? To that extent, Pakistan benefits from lower oil prices, which has induced disinflation or had induced disinflation. I'll talk about this a bit later. That led to a very sharp reduction in policy interest rates in Pakistan in the last 3 months, from 13.25% to 7%, and that has provided. It's not just an impetus to private sector businesses, but it's provided a huge fiscal space to the government in terms of debt servicing costs. So all these things have been growth supportive. However, the positive impact will be limited by low confidence, high disruption and uncertainty, and unfortunately, a return to fiscal consolidation mindset, because we need to keep the IMF program, we need to bring back the IMF program on track. It's off track right now. There's forbearance from the IMF because of the COVID-19 situation. We need to bring it back on track by about September. And that will mean that the original targets may be reworked, but nonetheless, the original focus of the program, IMF program, on documentation, on collection of higher taxes, all that will return, unfortunately. So that will be growth negative. However, of course, there are also other very important growth negative impacts: lower exports, the impact of lockdowns on growth, the effect on employment, consumption, growth and investment, the potential pressure on remittances, which is coming. We've seen a very strong uptick in the June numbers and the May and June numbers, but that is deceptive. In my view, those are one-off flows of people, of Pakistanis that have been laid off in the Gulf and are coming back. So I expect at least a 20% or 25% decline in remittances in fiscal year 2020-21, unfortunately. And then there will be a pressure on the government's revenue and fiscal position, and our access to international capital may be disrupted. So last few slides, very quickly wrapping up. In my own view, Of course, you've seen the PIDE numbers, you've probably seen the SDPI numbers. Lahore School of Economics has also produced some numbers on the impacts. Many of us are pretty much on the same page in terms of GDP loss. So my calculations are also pretty much in the same ballpark as the Planning Commission, as PIDE, roughly about 5% of the loss in economic output combined for fiscal year 20 and 21. The employment and the poverty numbers are where we disagree, and the range of disagreement is very large. So the Lahore School of Economics thinks that the potential loss to employment is only going to be about 1.2 million jobs. PIDE has produced a surprising number, which I think is a bit difficult to justify, of up to about 14 to 18 million jobs that will be lost. And the reason I say it will be difficult to justify, because they've included a loss of 6 million jobs in the agriculture sector, which, to be honest, as we all know, the agriculture sector is not is quite immune to what is happening to the rest of the economy. And we saw that with the wheat harvesting, where our agriculture sector has not been impacted to the same extent. So expecting job losses of that magnitude in the agriculture sector may be difficult to justify. So what I've done is, I think we need to bifurcate temporary job losses from permanent job losses. And I've included temporary job losses here. And I think if you include temporary job losses, many of which, inshallah, will come back, I think, by October, November, December. But I think right now, we could be in a situation where we face temporary and permanent job losses of 10 to 18 million, maybe on the higher side, 10 to 15 million. But certainly, this includes a large bulk of this in temporary job losses. So I think permanent job losses may not be as large. Therefore, it's very difficult to say at this stage, at least for me, to say what the impact on the poverty, the long run impact on poverty will be in Pakistan. So I think the numbers that are being talked about, I put a double question mark on this. We're not sure. I don't think anybody can be sure about the long run impact on poverty at this point in time. This is something that will become clearer from probably January next year onwards. But the fiscal cost is going to be very large. And finally, my last slide is my own forecast at this point in time of what I expect for growth, inflation, the fiscal deficit, the external current account, and the overall balance, the current account and the capital and financial account included. What I expect is for fiscal year 2020, 21 and 21-22. Of course, there are huge uncertainties, so the confidence interval of these forecasts is actually, I would say, about 60 to 65%, probably not anything more than this at this point in time. So I'll be happy to take your questions.
Thank you so much, sir, for such an informative and inclusive lecture with updated information. Now the floor is open for question answers. As per practice, we have requested the participant to write the question in the chat box. I will request Dr. Faida to ask the question with the name of participant and organization. Hand it over to you, Dr. Faida.
Thank you very much, Dr. Bushra. Assalamu alaikum, everyone. Sir, the first question is from Ms. Tanzila Rafi, who is a student of Master's Semester 4. The question is that globalization, the current situation of pandemic has greatly affected globalization process in economies. Hence, the trade of goods and services and international tourism has also affected adversely. So how the developing countries like Pakistan manage this situation, as the focus of the current government is on tourism and international trade?
I think it's a very relevant question, a very good question. So I think what will happen is that, once again, I think we need to disaggregate the short-run effects from the long-run effects. And the short-run effects on uh, on tourism, etc., are very large, of course. But I think in the long run, I don't expect the movement of people perhaps to be affected to the same extent as the effect of global trade flows. I think as far as global trade flows are concerned, I would be much more worried because two things are happening, and I think we need to, as far as, because the question relates to Pakistan, so let me just put it in context. The two things that are happening or have been happening that are relevant in the case of Pakistan. One is that, as you know, even before this coronavirus situation, we were moving towards, the industrial revolution 4.0, or a new paradigm where robotics, etc., was playing a very large part, and because of that, the whole dynamics of low wage cost manufacturing was changing, and countries like the US, etc., were bringing back jobs, or at least were hoping to bring back jobs from China, etc. And Pakistan was in the crosshairs of that already, because that is entirely our export model. We were potentially being impacted by that, and now the impact is going to come from the fact that because of the politics of the COVID-19 situation, more than the economics of it, global supply chains are going to be upended, especially from China. I think this is exactly what the US and Europe are planning to do, and they've laid it out very expressly as well, explicitly. And I think that will have some very large and uncertain consequences on global trade flows going forward and on Pakistan. So I think Pakistan really needs to be one. The risk to our exports is very high in the long run as well, and we need to be very vigilant. And the reason, unfortunately, this will have very large effects is because, as you know, global investment flows tend to follow global trade flows. So if global trade if there is a move towards de-globalization, then we can be sure that that will not be just for trade, but that will also spill over to investment flows. So it's going to be a very challenging time for countries, developing countries like Pakistan.
Thank you, sir. Sir, the next question is from Ms. Abu Seher, who is a student of Bachelor's Economics 8th semester. Her question is that how the policy making for sustainable development will change at the global level and in Pakistan during this COVID-19 situation.
Once again, I think a very relevant question. Obviously, I would assume that the question is not just about during the COVID-19 situation, but because there's some very potent and permanent potential changes in the global order on the horizon. And I think a lot of them have to do with China's central position in the global economy. So right now, as you know, China was about, in PPP terms, from almost 0% in 1960, from about 1.2% in 1970, its share of the global economy in PPP terms is about 20%, 21% in 2019. In terms of global trade flows, it's roughly about 17 to 20%. In terms of global direct investment, both inflows and outflows, once again, it's played a huge part. So if China is going to be downsized in terms of its importance in the global economy, and by the way, the reason China is important to developing countries, not just the world economy, is because China is the #1 export market for 45 developing countries, and the #2 export market for probably another 30 to 40, at least, developing countries. So when China is going to be, through the politics or geopolitics, is going to be displaced from the center of the global economy, I think it will have some very far-reaching and damaging impacts on a large number of developing countries. So one, what does it mean for our policymakers? One, they need to be vigilant. They need to recognize the changes. Unfortunately, our policymakers, not just this government, but for the last 20, 25 years, 30 years, have been backward looking, and when they've been forward looking, they're looking at the noses at the most. So if in the Air Force, now they use a term called BVM, sorry, BVR, beyond visual range. Policymakers now need to be BVR. They need to be beyond visual range. They need to be looking at the changing global dynamics, not just the politics of it, but the economics of it, beyond the visual range, and trying to adapt to that. Unfortunately, that's where I think our capacity is really weak. So the first order of business is to inculcate this capacity at the Planning Commission level, first and foremost, at PIDE, and at the Ministry of Commerce level. And then I think the question is, how do we devise, or what kind of policies we can devise? It's difficult to say at this stage, but I think one thing we can do is possibly, and this is once again going to be a political decision, is actually become a sort of inculcate even stronger economic links with China. I think that could be a potential avenue of growth, but we need to study these. There are ramifications for each of the choices we make. We need to study this. I don't want to give a global, glib answer at this point in time, because I don't have an answer, to be honest. I think it needs to be studied in greater depth before we come up with an answer.
Sir, the next question is from Ms. Afnan Asrar, who is a student of Bachelor's Economics 4. And she has asked that because of this pandemic, how would global economies and various markets like stocks, commodities, and derivatives respond to these sustained shocks in the coming days, short run as well as the long run?
So to be honest, I think I'm the wrong person to ask this, because I got this completely wrong. In March, I was telling all my clients that the global markets are going to tank, and you should get out of the markets. Now in June, those of my clients who didn't listen to me, tell me that we're up 45% in S&P 500. We're up 45% in our commodity exposures. So I think it's. But to be fair, I think I'm in a very esteemed company, because most of the economists around the world were predicting that the markets, there'll be bloodbath of the markets, and only the financial economists, those economists who sit in the financial markets and deal with the financial markets, or what we call as market economists, they were right. And so it's bizarre. When you see there is no explanation for this. If you read, there have been 40, 50 articles on this in the Washington Post, and Wall Street Journal, New York Times, everywhere. You just Google and search them. Every economist is confounded by what is happening in the global economy, in the financial markets. Why were 34 million jobs lost in the US, and the S&P went up? In the same weeks that there were job losses, the Dow Jones went up, S&P 500 went up. Why did Brent go up so strongly, signaling that there is demand in the economy, when job losses of the highest order were taking place in the US, Europe, UK, Pakistan, India, every country in the world? So this is something that, to be honest, is beyond me. So the only conclusion I can draw from this is either economists like us, Nouriel Roubini, Mark Zandi, etc., 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 we operate in a slow motion kind of environment. What we are saying will probably play out in 1 or 2 years. And by the way, Geeta Gopinath, the chief economist of the IMF, the chief economist of the World Bank, Kenneth Rogoff, the ex-chief economist of the IMF, every top name that you can imagine, sitting in Harvard, sitting in MIT, sitting in Stanford, have been saying exactly the same thing, that the financial markets do not make sense. they're completely divorced and delinked from what is happening in the global economy. So my only conclusion is that either we are operating, so there are two conclusions. One, Keynes was right. Keynes was absolutely right. There are animal spirits in the market, and economists cannot read animal spirits. You need psychologists for that. And secondly, uh, maybe and this is something that I've seen in my time in working for in the financial markets. What I used to say to my traders, to my treasury people, was something that used to come out probably right in 1 or 2 years. What they used to say to the management in the same meeting, they used to make money in the next 3 months, 3 weeks, 4 months. And they used to tell me that you operate in a slow motion kind of environment. We operate in the real time. So we will make money because we'll see opportunities. I think my only conclusion is that what we expect, deflation, the move towards a very large recession, global recession, perhaps a depression, is probably going to happen in 1 or 2 years. And in the meantime, the markets will be dominated by animal spirits that you and I can't figure out, and they'll continue to go up.
Thank you, sir. Sir, the next question of Ms. Rifat Manzoor was about the policy making, which you have already answered. And Ms. Saira Tufal, our faculty member, wanted to ask that from academic point of view, how this pandemic would affect the macroeconomic modeling in countries which were adversely affected by Great Recession of 2007-8, which are already incorporating the features of financial sectors to make sense how actually recession occurred, and also in those countries who stayed relatively safe from recession but still evolving the macroeconomic modeling.
Once again, I think that's a very good question. And at this point in time, I don't think we have the answers, because if I had the answer to how the financial markets were operating, then I would have had the answer to how macroeconomic modeling should take that into account. I think we are still not clear about the channels of how big a role sentiment has played, how big a role even sentiments are negative, to be honest. I've showed you slides about the World Economic World Uncertainty Index. So it's really bizarre what channels are operating in the financial markets that are different from the real economy. And I think we are all struggling with this. It'll take us quite a while to understand this. It's a really good question. When I have the answer, I'll certainly revert to you. I don't have the answer right now.
Sir, the next question is from Mr. Zishan Siddiq, who is from Ministry of Defense Production, and his question is how government planning will be more effective to overcome the COVID-19 in Pakistan.
So I think once again, so far it seems. So I don't know how many of you read my columns in Dawn in March, April, right up till early May. I was extremely critical of the government strategy, and of how they were dealing with both the economic impact of COVID-19, but the actual public health part of the element of their strategy. So far, it seems that their strategy has worked. I'm extremely skeptical about the numbers, to be honest. I can't imagine that we've reached a peak and the numbers have come down so sharply, especially in Islamabad or Punjab, when every second, third person I know has been affected. But nonetheless, we have to take those numbers at face value. So once again, I have to admit that my position was wrong, and it seems that the government was right in not going for a much sharper lockdown. And so in that sense, you can argue that the government planning was correct. They anticipated this well, that there will be a peak in July, which surprises me because if you go back a month, their own the minister in charge of this was saying that there will be over 1 million cases in July, and now they're saying that they were correct in anticipating that the peak will have passed in July by July 1. So I'm finding it a bit inconsistent, but nonetheless, they've got it right. I think, if I answer this in overall terms about not just vis-a-vis COVID-19, but the lessons that we've learned from this. One is that planning generally in Pakistan. So what I've seen very closely in 2008 and 9 and 10, from my vantage point at the Ministry of Finance, and as part of working closely with the Planning Commission, that generally what we do is we are missing out some. We do not, in our planning horizon, we are not taking into account what we black swans you cannot take into account, obviously, but you need to at some stage. But there are gray swans. Gray swans are things that you can see over the horizon. Maybe the probability is extremely low, but you need to take the impact, and the impact is, if they do happen, is extremely large. So now, in my reading of the virus, what epidemiologists are saying or virologists are saying, have been saying from 2011 onwards, in fact from 2008 onwards, is that we need to take public health emergencies much more seriously, the pandemic situation much more seriously. But that's not the only grey swan that Pakistan is ignoring. I think we need to take into account many other factors that we're not into our planning horizon. Um, One of the things we've already discussed is what will happen if China is no longer at the epicenter of the global economy. How is Pakistan going to be impacted? What impact will that have on the clout of China in the global world in geopolitics? What impact will that have on Pakistan, and how Pakistan we need to look at rearranging its alliances, etc. Obviously, we're not talking about ditching China, but perhaps what new alliances we can make, both economic and geopolitical. So I'm just thinking aloud. This is the kind of planning we need to do in this situation. It's an extremely fluid situation, both in terms of the economics, but also in terms of geopolitics and in terms of public health situation. And we need to take these into effect much more adroitly and deftly.
Thank you, sir. Sir, the next question from a master student in semester 4, and her question is regarding the impact of COVID-19 on unemployment in Pakistan, and what will be its short-run impact and what will be the long-run impact, and how government will specifically tackle this issue of unemployment.
Okay, so in my slide towards the end, I'd already shown something that the consensus seems to be, or maybe there isn't a consensus, to be honest. I mean, there's a range of numbers from 1.2 million job losses to 18 million, 1.2 million from Law School of Economics, 18 million at its worst from BIDE. I'm somewhere in between, but I think all these estimates, are not taking into account that there'll be temporary job losses and there'll be permanent job losses. And I think what we've seen, for example, so if I tell you once again with the export situation, so in March, when I spoke to exporters in Pakistan, the really large exporters, they were saying by the end of March we will have fired 50%, almost 50% of our workforce. By June, so by the end of March, they had fired 50% of the workforce, and by June they had rehired almost 50% of the people that they had fired in March. Why? Because now their exports are going up because they converted their lines of production from their traditional or conventional products to PPE. Right, so the health, the personal protection equipment, masks, gowns, shields, etc., etc., etc. So the impact that we were foreseeing in March and April, and now the situation is completely different, I think, to that extent. However, there are many parts of the economy, especially the service economy, restaurants, hotels, that are not open or are open, are extremely partially open. They're operating at 10 to 15% capacity. They're doing takeouts, takeaways. There is no dine-in. And so when I do anecdotal survey of the restaurants, even those that are open, even the waiters that they have, either they are nominally employed, they're not being paid, or they're being paid half salaries, half wages. Um, so it's a very difficult situation at this point in time to say really, but it's clearly some part of the service economy is going to be hit very badly, or is already hit. I would think that temporary job losses are close to about 10 to 12 million, but we don't know. I don't think anybody knows at this point in time, because obviously nobody has done a survey, and the next labor force survey, as you know, is going to be in about 2 years' time, or 1 to 2 years' time. So we won't know for quite a while. But anecdotally, it seems that there are temporary job losses to a very large degree. But my expectation is that, given that the economy is gradually coming back on stream, I would think that many of these temporary job losses will actually have been converted to, back to, they'll be back in employment, they'll be back in the job force, the workforce, by probably October, November, December this year, inshallah. I think that's my sense.
Thank you, sir. Sir, the next question is by Dr. Zubaria Andaleeb, and she has asked that what policy options are available for developing countries about post-pandemic recovery process. As such, she thinks that these countries don't have enough fiscal space to initiate any relief measure immediately. Then what will be the situation in this regard?
Yes, so actually, if I can link this with the previous question, the last part, the second part of that I didn't answer, but both of them have an overlap. So if I just restrict myself to Pakistan, I think, once again, a very relevant question. So I think, and I've written about this as well. So if I was a policy maker in about April or May, when the government of Pakistan announced its fiscal relief / stimulus measures, the fiscal stimulus was only about, to be honest, 1.2% of GDP, and some part of that was actually not even fresh money. It was things that the government was going to do in any case, like wheat buying. They just sort of brought that forward. So the fresh money that they put in terms of to combat the effects of this COVID-19 on the economy was only, in my estimation, was only about 0.6 or 0.7% of GDP, which is extremely low. So the argument was that the government does not have the fiscal space to do this. So my argument there is that when we look at what the economic policy priorities need to be, avoiding or fighting hysteresis, avoiding economic scarring, avoiding permanent loss of productive capacity and jobs in the economy is the #1 policy challenge that we face. This is what we faced in April and May, and this is what we, to a great extent, face now as well, even though the situation has improved much more than I was expecting in March and April. Nonetheless, this remains the fundamental policy challenge. So what this means is that if we need to increase our fiscal stimulus or fiscal relief package to about 2 to 2.5% of GDP, and that means additional borrowing, so be it. I think that is a cost that we need to incur because the benefits of doing that far outweigh the costs in terms of the increase in public debt, the increase in fiscal deficit, etc. Preventing jobs, preventing businesses, established businesses from going under, permanently, I think is there's a far greater cost to pay for that than there is to increase the fiscal deficit. So I think that's the number one priority that we need to do. The good thing is that whereas the Ministry of Finance is not really putting in the money because they think they don't have the fiscal space, whereas I think they do if they look a bit harder. The good thing is that the State Bank of Pakistan is actually also stepping up to the plate. So they've given guarantees to banks to, they've underwritten new fresh loans to small and medium enterprises. They've put in place payroll financing, which is extremely good package from the State Bank of Pakistan. So if we add the two, we're already at about 2.5% of GDP in terms of fiscal stimulus. But I think the Ministry of Finance can do more, and how they can do more is one, they've got fiscal stimulus or fiscal space from the reduction in the policy, the state bank policy rate by about 6.25 percentage points. That's given a huge fiscal saving of about 300 to 400 billion rupees in the budget. One is that. Two, I think we need to suspend our program with the IMF in terms of the targets for about 6 months. And the reason I'm saying that is because if we need to borrow from the state bank, for about 200, 300 billion rupees of additional borrowing, which can be inflationary but may not be, and I'll explain that a bit later. I think we need to do that to ensure that we don't have the fiscal constraint. We have fiscal space to protect businesses and jobs. The reason I think it's not going to be as inflationary as in the past is because I think there is a danger of inflation in the system because oil prices have been gone up from $19 to $43. But nonetheless, the overall situation in the economy is disinflationary because aggregate demand is completely collapsed. And I think that gives us some space to the government or to the State Bank of Pakistan to lend to the Ministry of Finance by about 200 to 300 billion rupees. So that's how we can fight the fiscal space part of it as well.
Thank you, sir. Sir, the next question is by Miss Amna Bibi, and she has asked that, like you said, gold is considered as a safe haven in China. China and India are accumulating gold reserves. Has Pakistan any inclination toward gold reserves amid this uncertainty?
Yeah, so China and India traditionally have a demand for gold. That's why they have very large, not just public, not just the sovereign, their central bank, PBOC, but also the average household in China and India hoard gold. They store gold, and a large part of the wealth is stored in gold. What I was talking about was in terms of the financial markets and the behavior of financial agents or economic agents to so when they make the portfolio decisions of moving away from certain asset classes, for example, emerging market equities, then they will move into the US dollar, or they will buy not physical gold, but they'll buy what is known as ETFs, exchange traded funds. So they'll buy non-physical gold in the financial markets, and that is their primary motivation is to hedge themselves from losses in emerging market equities or other equities in emerging market currencies, and move into safe haven assets like gold, the US dollar, or Swiss franc. So there are two separate markets. There's segmentation in the markets. What you're talking about is the demand for physical gold. That is a cultural factor in China and India. Then there is a demand for gold from the central banks of China and India, and some other countries. And the third part of it, what I was talking about, is the demand for non-physical gold by financial market players.
Sir, the next question is by Miss Maria Mazhar, who is an MPhil scholar at Quaid-e-Azam University, Islamabad. And her question is that in this current pandemic situation, already we are having the expectation of higher poverty level. Then there is increase in inflation, which will of course affect the common people. So if inflation further increases, then it will create even a riskier situation. So what measures you suggest to cope with this high inflation, specifically in this pandemic period?
Right. I think it's a very good question because, as you may have noticed from my slide, I don't know how many of you noticed, but I was expecting inflation to go up to 11.6% by June end 2021. So this is the most, for me, the second most unfortunate part of the whole thing for Pakistan. One, we've been impacted by the employment situation has been impacted, and secondly, the inflation situation has been impacted by oil prices going up to $43 from $19, and the government is passing on this, and this is highly inflationary. So I think to answer your question, what I would suggest, what I would recommend, and I have recommended in my town columns, is that we negotiate a standstill, what is known as a standstill agreement with the IMF. So we de-link ourselves from the targets of the IMF program or the thrust of the IMF program, and the government of Pakistan starts subsidizing electricity and petrol at the cost of a higher fiscal deficit. There will be a higher fiscal deficit. That is the price we have to pay. That is the price we have to pay for not increasing our tax to GDP ratio to 15% or 17% in the last 25 years. So unfortunately, that's a short-run, cost we have to pay. But we have to subsidize because we have to insulate the people. You cannot have unemployment and inflation, a high inflation. That is absolutely untenable. So I think the first order of business would be to explain to the IMF that we will need to take a break for 6 months, maybe 6 months to a year. We cannot increase tax. We cannot increase taxes or increase electricity prices or gas prices in this situation, or pass on petroleum price increases. We have to subsidize these. We have to absorb the impact of this in the budget, which will mean a higher fiscal deficit. Please tolerate this for 1 year. Then we'll come back to a much stronger IMF program, hopefully, once this has passed. So that's the only, in my mind, that's the only solution or situation that we can follow.
Thank you, sir. And this is also related to the question of role of IMF, because right now IMF role is coming as negative because these are the news. They have asked the government to not increase the salaries also. So what's the role of IMF? It's positive or it's negative?
Obviously the IMF, so we need to step back to really answer this question. There are two parts to this question. On the one hand, of course, it's very negative in the current situation, but let's step back and see where Pakistan was in July 2018. So without the IMF, the situation would not have, the external account would not have stabilized. So the IMF program is the anchor or the linchpin for the external account stability that we've managed to bring about. However, in the current situation, the IMF policies or the IMF thinking of a return to fiscal consolidation, a return to austerity, passing on electricity price increases, passing on gas price increases, passing on petroleum price increases to the public in a situation that we are in with the coronavirus situation, that role is negative, clearly. So I think we need to, and I think there is a greater recognition with the new IMF leadership, that there needs to be an adaptation of the traditional IMF role. They need to be more adaptive. They need to be more supportive of governments and of higher fiscal deficits, of departure from fiscal austerity. And I think we need to take advantage of that. The problem I see is, to be honest, I see that our policymakers, especially at the Ministry of Finance, are a bit timid. They're not taking advantage. They need to be more aggressive in their negotiations with the IMF. They're more passive. They need to be more assertive. That's the problem.
Thank you, sir. Sir, it's the last question by Ms. Kainat Bibi, who is a student of Master's Economics second semester. And her question is regarding the currency, the US and Pakistan current exchange rate, which has been falling. Like today, it's 166 rupees to $1. So according to the question, what will be the impact of COVID on Pakistan currency value, as value of Pakistani rupee is still slowing down as compared to dollar? And what steps government should take to stabilize this rupee value?
So good question. Normally, I don't talk about the exchange rate values because this is market sensitive. But I think it's important to I've given an indication in my slides of what I think about the rupee, which is a bit contrarian from the market. It's a contrarian view. So my view is, and this is also different from where I was in March or April. I think right now there is more positive news for the rupee than there is negative news. And the reason I say that is that the export situation has turned around very sharply in June. And we expect it to turn around to continue turning around very sharply in July, August, etc. So the export situation is not as bad as we were all predicting, including the government and exporters in March and April. Exports have picked up. At the same time, barring the increase in oil prices, there is aggregate demand in the economy is completely absent, which means that the import situation will continue to remain, depressed. The only increase in imports is coming from oil prices. So until this situation remains like this, our trade balance will continue to improve on a monthly basis, and our current account deficit will improve. Therefore, in my view, going forward, what is likely to happen is that from about August, September onwards, the pressure on the rupee will ease. Right now, the pressure on the rupee is coming from, it's a residual pressure. It's coming from what happened since April, May, etc. is that the state bank, because there was pressure on the rupee, there were outflows, the state bank was actually staggering the outflows. Those outflows are now gradually coming down, but there's a residual a number of outflows in terms of dividend payments and some other payments, and portfolio outflows. Those outflows are now towards the tail end. I expect these outflows to completely come out of the system by the end of July and early August, inshallah. And from then onwards, I think the pressure on the rupee will ease quite substantially for a few months.
Thank you very much, sir, for such comprehensive replies of all the questions. I hand over the mic to Dr. Bushra Yasmin.
Thank you, Dr. Faiza. It's again the time to say goodbye. Thank you so much, sir, for taking out time for us and delivering such an informative webinar. Thank you everyone for joining. See you next week for the last webinar in this series, inshallah. Take care and Allah Hafiz.
Thank you. Good Hafiz.
Allah Hafiz.